Welcome to the Wealthworthy Podcast. I'm Trisha.
Hi, I'm Darian.
Thank you for joining us. This week we'll be talking about investing like a pro. Kudos for you for looking at different ways to continue investing. Now, what are a few ways that you would say people need to consider initially when investing?
First, start with a balanced investment plan. Have a clear idea where you want to go financially and how you plan to accomplish your financial goals.
Yeah, so definitely you want to look at different options where you are being intentional about how much you're investing, but also covering any necessary bills, limiting any credit card debt, and making sure that you do have savings for emergencies, because you want to leave any funds in the different investment vehicles that you're choosing. When we're looking at what options and how convenient you can make it, you really, if you're like me, need for things to be as convenient as possible, particularly if investing in the markets isn't your go-to day-to-day job. You're looking for a way to more passively invest in the markets. Being able to just look at options that allow you to automatically transfer funds or to continue growing your portfolio as you have more money coming in or you're putting aside specific dollars for it. You really just want to be intentional about growing your portfolio, even when you're looking to make it convenient. So you can set things up and then forget about it for a little bit, but you do need to make sure that it's all taken care of. One thing I want us to be aware of is just the fact that the markets today are a lot cheaper to invest in than it has been in the past, because a lot of the institutions have lowered their costs and fees so that we're able to benefit from that. So now you have options like Robinhood or Webull where you're not paying commissions on the stocks you're investing in or ETFs that you're investing in. And even when you look at different index funds and mutual funds, there are a lot more options now that are lower fees than it had been in the past. So that's even more reason to be sure that you're investing in different options with your funds. The goal for investing is really to limit how much you're paying out in fees, being able to get high interest on your money, and minimizing any tax liabilities that would eat into any profits that you're earning. When looking at different vehicles, we are considering which options give you the best returns for whatever it is that you're investing in. A lot of banks, because they are competing, they come up with a number of different promotions that reel you into investing with them. But if you're not careful, you'll end up with a bunch of different banks just because you're taking advantage of these investment promotions. But you really want to be sure that whichever vehicles you choose, you'll be able to set it up so that you're earning money on your investments. And the best way to do that is to set it up and then regularly add more money as time goes on. We really want you to start thinking about which vehicles are a must for you to continue investing and to grow your portfolio. We want this to be funds that you're not planning to touch for the near future, so that it has time to take advantage of any kind of compounded interest, and you'll be able to really see meaningful growth on your dollars. The must-dos are to have a 401k, because employers that do a match for your 401k allow you to get free money in that sense. Even though you'll have to pay taxes down the line, you want to take advantage of that option to have compound interest starting now. And the 401k with an employer match gives you the best option to do so. So definitely be sure that you have that. You have at least the amount up to the match so that you're able to take advantage of that compound interest and also lower your immediate tax amount. Then you want to be sure that you have an IRA. If you earn lower than $139,000, then you can invest in a Roth 401k, which means that any earnings that you get out of the IRA will be tax-free, which is a great benefit. And then if you need to take out your initial investment, then you have the option to do so as well. Then you want to be sure that you have a savings account that's earning at least 1.5%. If you can get 2%, that's great. We'll talk about a couple of options there. You want to be sure that you're investing in some kind of diversified portfolio, and you can do that with different index funds. You can look at ETFs, you can get a managed portfolio, and there are tons of like dividend stocks or zero commission stocks that you can begin investing in so that you're earning across a number of different industries and different companies without putting all your eggs in one basket. Of course, if you opt to invest in individual stocks, then it's a higher risk, but higher risk can either be really favorable for you or it can lead to a good amount of loss. So just be wary of that when you are researching and deciding which areas you're willing to invest in. When it comes to stocks and ETFs, you can look at options like Robinhood, Webull, and Charles Schwab, which offer zero commission trades on stocks and ETFs. And a great deal of these also give you some good research options so that you can see how those investments have been performing in the near future, how it performed over the last few years, and just what kind of returns you can expect. Of course, the markets move how they want to move, right? So you really want to look at options that'll be within the risk tolerance that you're willing to partake in. If you are interested in index funds, those funds are chosen by individuals, and it still gives you the same diversity that you would get from investing in an ETF. The ETFs are more electronic, but it chooses different industries in the same way that the index funds would, but the index funds are chosen by someone. And if you look at options like Vanguard, Fidelity, or Charles Schwab, then you have the options for some low-cost ones and some good options that really are able to index the current stock market for whatever industries you're thinking of. You can be indexing the whole market, you can look at specific industries, but whatever the case, you really want to just get that sense of diversity in whatever investments you're making. If you are concerned about how much you are investing and you really just want to start by dabbling, there are options for you to have a more managed portfolio where you're getting fractional shares of many different stocks. A lot of the ETFs and index funds also do that, where you're really investing in pieces of those different stocks, but they have higher minimums than some people might want to invest in, especially if you're looking at investing in an individual stock versus a portfolio that's been chosen for you. So if you want to do fractional shares, you can look at options like M1 Finance or Betterment, but these have like different fees that come along with it. Stash is another option. They have a $5 minimum for you to invest and then a monthly fee that they want you to pay for the option to invest such small amounts. For Robinhood, they are starting to look at fractional shares as an option for their customers, and so is Charles Schwab. So you can really just start with small amounts, dabbling into some of these investment vehicles if you're not ready to put in a meaningful amount yet, or if you haven't saved up enough that you feel comfortable putting out there in a portfolio. One thing to be wary of is just the fact that when you are earning a good interest rate on your money, so let's say you invest in a portfolio that's earning 7 to 8% annually, then that gives you a good return on your money if you have money just sitting there. If it's sitting in an account that's already earning 0.01%, then you really need to find ways to at least be earning 1.5 to 2% on your money, and better than that is when you're earning 7 to 8%. So just to give perspective on that, if you're earning 8% on $10,000, then you've earned about $800 for the year on that money that you put in an investment index fund or an ETF or a managed portfolio. But if you only earn 2%, then you're earning about $200 on that. And that's a big difference the more you start investing. So you really have to be careful that you are planning out your money as best as possible. When I talk about the different managed portfolios, like Ally Investments allow you to have a free managed portfolio if you're willing to have 30% of the money with them in cash and invest the rest in a portfolio that they'll manage for you. That comes with a $100 minimum. And that's a great way for you to have somebody else think through some of the investment vehicles that make the most sense for your money at that time. And with all of these options, you can see how it's performed historically, so you know if it's something that might be worth you putting your dollars in. If you are getting a little more advanced, then you can look at options trading. And some platforms that allow you to do that for free include Robinhood and Webull. Webull is something that's coming soon to them, but it'll be a free option for you. And what I like about options trading is that it comes with a lower investment requirement as well, because you're just trading the option to buy or sell a stock versus looking at buying the whole stock for whatever the market price is. So it could be a cheaper option for you, but it's more advanced, because if somebody actually does buy the stock or exercise that right to buy a stock from you, then you could be responsible for putting up and making sure that they're able to do so. So you want to make sure that you have a good understanding. And for me, as I've been trying to learn more about options trading, I've looked at different education vehicles, and it's been helpful in just understanding how those work. So like on the TD Ameritrade platform, they have different webinars that you can listen to if that's something you're interested in. And then on some of these platforms, they also give you a paper trading option. So you can trade with paper money and you're not trading with your real money. So kind of like playing Monopoly, where you're just using fake money and you could be racking up all these funds. The only downside is if you're racking up all the funds, you're going to wish that you had real money in that. But you can afford to test it out for a little bit without feeling like you're missing anything, because you're just trying to learn. And then the last thing that I would want to mention in terms of investments would be for real estate investing. So if you want to invest in real estate without having to put forth money to buy real property on your own, you can look at different REITs, real estate investment trusts, where you are taking part in, kind of like the fractional shares, where you're taking a piece of that investment without fully having to invest the amount that the stock is worth. So with REITs, you can look at options in your stock portfolio. So some of them trade as ETFs, and you can also look at sites like Fundrise that give you a specific place for investing in real estate as a whole. So with that said, you have a number of different options to consider for where you can be investing your money, whether it be you looking at like, hey, I want to do a 401k, I want to do my IRA, I want to do an ETF. Like, you can look at all these different options and decide what'll work best for you. I almost forgot to share the savings accounts that have some of the best rates out there currently. Biobank, which is a division of MidFirst Bank, a privately owned Oklahoma bank, but they are mainly online. They're offering 2.02% interest on your savings. Others we're more familiar with, and you can still earn a pretty decent rate, include Synchrony Bank. They're offering 1.8%. Marcus, which is a division of Goldman Sachs, is offering 1.7%, and then Ally is offering 1.6% currently. So those are a few options for you if you are still looking for a savings account that'll offer you at least that 1.5% return on your money. And for the index funds, there are a few different options that I like just in terms of looking at indexing the broad market. So if you are interested in looking into Vanguard, there are some including VTSAX, which does the full total domestic stock market. There's VTIAX, which does the full international market, and then VBTLX, which is focused on the bonds portion of the market. For Vanguard, those are some really good ones that give you that broad diversity. If you are interested in one that doesn't have any fees and you're a customer with Fidelity already, you can look into VZROX. And that one has no fees and it tracks the entire market. And then Charles Schwab has one as well, SWTSX. So we'll put all of this in the description box so that you can reference it and look into which options work best for you. And then one important thing to mention with the Roth IRAs, even though the limit is $139,000, that's for single individuals. If you're married, that threshold is at $206,000. So just be mindful of where you land in your current family situation to know if that's a good option for you or not. But if you can take advantage of earning appreciation on your stocks without having any tax liability, then the Roth IRA is a great option.
The important points for you to take away today: that you need to develop a disciplined investment process. Come up with an investment process where you can learn the market, determine your risk tolerance, so that you can make your assets work for you at a pace that makes you comfortable. The goal is always to work smarter, not harder. These are investments for the long term, so continue adding to your investments so that you can hit your financial goal. We'll include the links to the platform mentioned, Robinhood and Webull. They both offer free stocks for signing up. Webull also offers bonuses for opening up an IRA. If you're unable to open up a Roth IRA, you can still open up an individual IRA, which allows you to put pre-tax money into the investment account. You can then invest in stocks, ETFs, index funds, or mutual funds. Let us know if there are any concepts you'd like to hear more about. Thank you for joining.